current tax revision, the effect of Section 23H on prepaid expenses. For prepaid expenses, the normal rule is that an amount can be deducted at the earlier of when it has accrued or when it is paid. However, Section 23H places a limit on the amounts that are deductible for tax purposes regarding prepaid expenses. And Section 23H says we first have to look at the period for which these expenses have been prepaid, so when these expenses will accrue, as well as then the total of the prepaid expenses. So if we have a prepaid expenses total of 167,000, we will have to go and break down this total into the different prepaid expenses that make up this balance total of 167,000. First thing we have to do, according to Section 23H, is to look at the periods when these prepaid expenses will accrue. And if the period is within 6 months after year end, then that means that Section 23H will not apply. For all these prepaid expenses, we can deduct it in. We can use the normal rule to deduct it during the current year when it was paid. So in this list, we see that the first 2 prepaid expenses will accrue within 6 months after the reporting period, and therefore we look at the individual amounts first, and it's within 6 months. So we will deduct it when it is paid. So here we'll see that the tax rules are not the same as the accounting rules. Okay, so Section 23H is not applicable and the normal rules apply. Next, now we have to look at the remaining prepaid expenses, but now we look at the total. Now we look at the rand amounts. So for the first section of, or first part of Section 23H, regardless of what the rand amount was, as long as the expense accrued within 6 months after the reporting period, we could deduct it for tax purposes when it is paid. However, for the second part of Section 23H, we have to look at the total of the remaining prepaid expenses. And if this total is less than 100,000, then Section 23H still does not apply, and we can deduct it when it is paid. So in the current period, we'll deduct these prepaid expenses for tax purposes, but for accounting purposes, they will only be expensed in the following year. Therefore, the tax rules are not the same as the accounting treatment. So in our current tax calc, if we have to put this into our current tax calc, we will have to make an adjustment for tax purposes to deduct these amounts in our current tax calculation. However, remember that these prepaid expenses were not expensed in the current year, so they will not be included in this accounting profit yet. They will be included next year, but for the current year, they are not included in accounting profit. Because remember, prepaid expense, what will be the journal for that? The journal will be to credit bank when we pay the expense and to debit the prepaid expense. So it did not affect profit or loss, so it's not included in my accounting profit. Therefore, no adjustment necessary for accounting purposes, but for tax purposes, we are allowed to deduct the full amount. That's the normal rules, deduction of earlier paid or when it has accrued. Okay, let's look at the same example, but now you'll see that I have just changed the amounts a little for my remaining prepaid expenses. So we first, again, went through the normal rule where we looked at the periods first, and we said, okay, these first two these first 2 prepaid expenses will accrue within 6 months of the reporting period. Therefore, Section 23H is not applicable, and we can deduct it when it is paid. So here we will have to make an adjustment in our current tax calculation because the tax and the accounting rules are not the same. Now, if we go to the rest of our prepaid expenses, so that was our first requirement is the 6 months. Here at the bottom, top, you'll see that's our first requirement. And then we go to the second requirement, which looks at the remaining prepaid expenses and the total amount. if we do that, we'll see that now the total amount actually exceeds 100,000. And now Section 23H kicks in. So 23H now says it's applicable, and it says now the limitation is applied, so the normal rules do not apply, which means the normal tax rules do not apply, which means that for these expenses, these prepaid expenses, where the total amount is more than 100,000, we will only deduct that for tax purposes when they are expensed. So can you see that for these prepayments, the tax and the accounting rules are the same? So therefore, when we do our current tax calc, we will, for prepaid expenses A and B, so these two here at the top, we would not have to make an adjustment for accounting purposes, because remember, they would not be included in our accounting profit. However, for tax purposes, we will have to go and deduct the total of 143,000, the total of these two prepayments. Because Section 23H is not applicable, so we go to follow the normal tax rules of deduct where earlier of accrued or paid. However, for prepaid expenses C, D, and E, we saw that now Section 23H is applicable. We're not allowed to follow the normal tax rules and deduct these prepaid expenses. We actually now have a situation where our accounting and our tax treatment is the same, which means the amounts were not included in our accounting profit. Just remember, none of the prepaid expenses are included in our current year accounting profit. However, we are also not allowed to deduct it for tax purposes. So no adjustment is necessary for prepaid expenses C, D, and E. Now, just a quick note. I know that in Bell, you usually get marks just for saying that the effect is a zero effect. For accounting purposes, you do not have to do this. So for accounting purposes, if the effect is zero, you do not have to include this in your current tax calc. So you will effectively, in this current tax calc, only have to include this line item, which is the adjustment that does need to be made. Okay, with Section 23H, just watch out for prior year amounts, because we now saw that sometimes we can deduct these expenses and in the year that we did the prepayment, and sometimes we cannot. So this was our current tax calc for year one, where we said the only amount that we need to deduct or adjustment that we need to make is for the prepayments where the tax and the accounting rules were not the same. So therefore, we had, only had to deduct well, in this case, our first example, the full amount of prepaid expenses. However, remember that next year, this amount of 167,000 prepaid expenses will be included in our accounting profit for next year. So it will be in there as a deduction. The 167 will be included in here as an expense, so it has already been deducted to get to this accounting profit. However, it's already been deducted for tax purposes in the prior year. So what we now need to do in year two is we will have to go and add that back. Otherwise, we are going to deduct it twice, which will not be accepted by the revenue services.